Good morning, everyone. I'd like to start by thanking the government of Italy for this warm invitation to visit this amazing Expo Milan, and also thank the AMIS Secretariat for all the help and support in the elaboration of this presentation, particularly to Peter Tones, who is very cooperative with us. My presentation consists of two parts. The first part focuses on global market assessment and relies strongly on AMIS and FAO supply and demand forecast as of early October. It should be noted that some figures differ somewhat from those presented in the latest FAO and AMIS market appraisals, because the release of new official estimates by governments that called for revisions in these supply and demand forecasts. And the second part focuses on Brazil, addressing some recent developments and supply and demand forecasts, also for as of early October, the first days of October. Yes, we can see the table with global soybean supply and demand forecast for 2015 and 16. We worked with a scenario of a fractional year-over-year drop in global production after 3 seasons of strong expansion. Total supplies should improve further thanks to record high carried-in stocks from 14-15. Global utilization is forecast to rise further, though less than in the last 2 seasons. World trade should expand further, though at a below average rate. Ending stocks could exceed last season's historical peak. Further improvement in stock-to-use ratios point to a very comfortable supply and demand balance, in our opinion. In the chart, we observe that global production should be the second large output on record. The share of United States, Brazil, and Argentina to stabilize it at over 80%. So the bulk of the production. Concerning world area in yield, we believe in further expansion in the harvested area, possibly outweighed by a small year-over-year drop in average yields. On slide 3, yes, slide 3. It's worth remembering that in the northern hemisphere, the harvesting of 2015 and 16 crops is already underway. So first production estimates are already available. However, in the southern hemisphere, the plantings of 15-16 crops in Brazil and Argentina have just started. Then only tentative production forecasts can be provided. The weather remains as a mere unknown. Brazil, Argentina, and the United States combined production could fall slightly due to a retreat in productivity. United States and Argentina, production trailing behind the last season's record, mainly on account of somewhat lower yields. For Brazil, year-over-year production rise 4%, thanks to a further small expansion in area combined with an above-average yield forecast. Concerning utilization, world's total disappearance should rise further, but possibly less pronouncedly than last season. Regarding the major players, year-over-year analysis show China to slow down in demand growth, United States possibly stalling or down very fractionally, and Brazil and Argentina with a steady growth. Total production should again exceed total disappearance, but a smaller margin, about 1% than last season. It's important to stress that this forecast relies strongly on the materialization of good crops in South America. Now moving on to stocks. The global production surplus should facilitate a further accumulation of stocks, around 9% or over 9% in a year-over-year comparison. China, possibly downsizing of record large inventories, especially government stocks, contributing to slowdown in import growth. Argentina, forecast to remain close to last season's all-time high. Brazil rising to a new peak. United States up sharply for a second consecutive year, marking a 9-year high, in part reflecting reduced export opportunities. Concerning stock-to-use ratios, the global stock-to-use ratio should improve further compared to last season's already historically high level. The major exporters' stock-to-use ratio jointly expect to climb further, reaching a new peak, pointing to comfortable global supply and demand balance, and with international price remaining under downward pressure. As long as trade is concerned, after 2 seasons of strong growth, forecasts point to modest year-over-year increase in global trade, just about 1%. And Asia continues to dominate the import market with almost 80% share, and China continues as largest world buyer with around 60% share. Still on China, imports could grow less than in the last 2 years under the influence of large stocks, including state reserves, drops in soy processing margins, although some slight recovery has already been reported by Brazilian traders due to increase in soy meal demand in the domestic market of China, and also due to large availabilities of maize and China's currency devaluations. Moving on to exporters, United States, Brazil, and Argentina remain as the top suppliers with a combined market share of over 85%. As long as Brazil is concerned, exports could rise further, also in Argentina, while a contraction is expected in the United States. Brazil shipments may outpace US sales by as much as 15% for the second time in history. And so the United States is set to lose some market share as exports from Brazil and Argentina have become more competitive, especially due to weak national currencies. Concerning international price developments, 2014 and 15 reveal a relaxed supply and demand situation, possibly lasting to 2015 and 16. And as we can see from this, chart, spot prices, concerning spot prices, in 2015, it has moved well below the corresponding values of 14 and 13. And as long as future prices are concerned, we have observed that during the last 6.5 months, futures have also been trading significantly lower than in the corresponding period of 14 and 13. Well, turning now to Brazil, a key player at this point of the season. As I observed before, it's important to stress that the planting of 2015 and 16 soy crop has only started in some states, and it makes this production forecast a challenging exercise. Brazil is the world's second largest producer, and trailing closely behind the United States, and is supposed to be the world's top supplier in 15-16, as seen before. Yeah. So in 2014-15 crop season, production reached a record high of 96.2 million tons, up 12% as compared to the preceding year. This was basically thanks to an increase in both area and yields. Area harvested expanded by 6% year over year, and average yield rose to near record levels due to a good level of technology and very favorable climate conditions. So the area harvested increased by 5% on a year over year, 5 or 6%, sorry, in a new estimate. Well, as mentioned before by Joe Glauber, this slides shows us a key factor driving farmers' planting decision, that is price development. So in the charts, we can see that international soybean prices have fallen pronouncedly from mid-2014. However, the strong devaluation of the Brazilian currency throughout 2015 has more than offset this fall. So in the domestic market, prices received by farmers and exporters are currently ranging at 6 months high, almost reaching 2012 peaks. These price levels are quite profitable for Brazilian farmers, also relative to competing crops, particularly maize. It encourages farmers to expand soybean area. Our latest talks with farmers and traders, they show us really optimistic about this next season. The current soybean area forecast is, in our forecast, is rather conservative. We are adopting the lowest year-over-year rise in the last 9 seasons, but it still could increase slightly, basically at the expense of maize plantings. So I would like to address some factors that can affect our projection. The current all-time high production forecast for 2015 and 16 ranges strongly on the projected record yield level. Actual yield levels will mainly be determined by 3 factors, in our opinion: cost of production, that is input prices, access to rural credit, and weather conditions during the entire campaign. Concerning production costs, upper left diagram, reports from fertilizer retailers point to 16.5 lower accumulated sales in January-August as compared to the same period in 2014. This is the first sales drop since 2007, and attributed to higher prices as most inputs are imported. The situation is about the same for pesticides and so on. These higher production costs may really lead to lower input use, possibly dampening yields. We are carefully watching these developments in order to assess the next steps in terms of our agricultural policies. Rural credit height-end diagram in blue. Total loans to the farm sector decreased almost 7% in nominal values from January to September 2015 as compared to the same period in 2014. This is the first drop since 2005. And the main reasons may be attributed to the sharp economic recession that we are facing in Brazil and higher risks of default perceived by bankers. Last but not least in this slide, I'd like to make some brief comments on weather conditions. The lower left diagram. Here we address the likely El Nino impacts. The key center-west, the most important soy growing region, is not likely to be affected by El Nino. That is blue. That circle in blue is our center-west region. That is the most important in terms of soybean production in Brazil, and is not likely to be affected by El Nino. But part of Brazil's southern states and the green circle may be subject to intense rains during the harvest period. So this is the second most important for soybean production in Brazil, trailing close to the center-west region. We is very concerned about this possibility. And also following up the recent forecast for weather conditions within the next 6 months. This slide is the first tentative production forecast, pointing to a new output record, slightly surpassing 100 million tons, up 4% from 14-15. Further increase driven less by area expansion at just 1.7, than by additional yield gains, projected to rise to the second all-time high of 3.07 tons per hectare. If materialized, that this production level would represent the fourth record-breaking harvest in succession. Well, let's have a look now in the Brazilian soybean balance for 2015-16. As you can see, there's a supply is forecast to increase on higher production, so 4% in production, and supply about the same, 3.9. Utilization about the same level, starting at 45.8, very close to last year's. But exports expected to increase, propelled by the real's devaluation and sluggish domestic demand. But some uncertainties remain due to some doubts regarding China's import demand. Stocks strong increase over the last season, and the highest since 2007-2008, reaching 3.5 million tons.